Support for Short Stops is presented by the Caylum Trading Institute. Check out our website at www.cayluminstitute.com. On today's episode,
I mean, it is easy for me to put on a show and be cocky, make all kinds of phony things, you see what I mean, blinded by it. But to express oneself honestly, not lying to oneself, that, my friend, is very hard to do.
call it what you want, a game, an experiment, a gamble. But stock trading in the global financial markets to us is a business. Every day you're surrounded by the noise. Buy, sell, hold, buy more. And we're going to quiet it down and filter out the best trading strategies, tips, and stock picks. You want information on how to find your next bagger or home run? You'll find it right here on Short Stops.
Bruce Lee once said, "I fear not the man who has practiced 10,000 kicks once, but I fear the man who has practiced one kick 10,000 times." Ladies and gentlemen, welcome to episode 13 of Short Stops. Today's episode is all about accountability, and with me today is Bryan Gomez.
Hello.
And Mr. Miggoy Patajo,
Hi.
junior equity trader for City Securities. And I'm sure you guys have gone through a lot of experience over the last few years about understanding yourself, being more accountable. And so how important is keeping a journal and a record of everything that you do?
I think it's essential to keep a journal as a trader because, especially in any craft, deliberate practice is required to improve greatly in a shorter amount of time. And how do we do deliberate practice without any feedback? So when we do our ledgers diligently and we log in all the statistics in that ledger, we're able to give ourselves the feedback. We're able to keep ourselves honest. So I think it's absolutely essential.
I agree with Miggoy, especially if you want to build a business around trading. You cannot grow or scale your business without knowing your numbers.
A regular journal would probably have where you bought, the amount,
Yeah, those are the basic ones.
whatever you gained, whatever you lost, right? But that doesn't tell you much about whatever is happening to your current trading situation. What exactly are you guys looking for when it comes to data analytics?
So there are two things that we mainly look at. We compute for the hit ratio and the edge ratio. So the hit ratio is your accuracy. How many right trades do you make in a set of trades? And then your edge ratio is your risk reward as a trader. It's actually computed by getting the average of your winning trades over the average of your losing trades.
On your personal end, what's your hit ratio and edge ratio looking like?
My edge ratio is around 2.5, and my hit ratio is around 30 to 40%. But it changes from time to time, depending on the market. Like, for example, recently, you'll see the market having this bad sentiment. You have to expect that your hit ratio and edge ratio to go down. So that means that's a signal for you to lessen your trades and to step aside. So that's one of the advantages of knowing your numbers.
Okay, so you don't just measure your hit and your edge, but when you start to see it dwindling down, you also scale back in the number of trades. So even the number of transactions that you do in a month, it's also becoming smaller and smaller.
That has to be that way.
Miggoy, what about you?
I agree with Brian. If we're talking about averages, I can throw data from my past 2 years of trading. I'm a low hit ratio trader. I have around 30% on average hit ratio, but I make up for it with a high edge because I'm able to hold on to my runners with size. But if we're talking about the smaller term, the smaller picture, like just this year, I've seen my hit ratio plummet and I've seen my churn, which is how many times you deploy your capital within a certain amount of time. I've seen that increase drastically. So my churn for this January was around 20 times. For February, it was around 19 times. And my hit ratio was below 30. And so my returns were affected as well. When I see this data, it tells me that something must change, something must adjust.
So just to recap, I mean, you were doing 19 times?
Yes, 19, 20
So if you had
times.
$1 million pesos, that means you were churning over 19 million pesos for the month of January?
Yes, that's true.
Okay, so when you saw those numbers, meaning hit ratios were going down and edge were also going down, your churn rate didn't stop going down.
That's the thing with the ledger. It's raw data and it's meant to keep us honest. but then at the same time, we see things subjectively. So I saw it in terms of I need to put more effort into my trades. And what happened was I executed a lot more trades. When, if I just checked my ledger, if I was more faithful to that, I should have decreased the amount I deployed and just stuck to my strengths or just picked my spots with this market.
Hirap tumaba, no?
Yeah, that's true.
So what's the ratios for like a break-even trader?
As a standard, if your hit ratio is 30%, you have to have at least 2.4 times edge ratio. So that means for every $1,000 that you risk, to have to expect to make $2,400.
And basically what the churn does is that it just acts as a multiplier effect.
Yes.
Basically, if you're
Yes.
making money and then the number of transactions that you're doing that are profitable, then the account also goes up by a bigger amount.
Yes.
Correct? Is there anything else that you're looking for when it comes to your journal?
So one thing that I think is key, aside from having these statistics, is to be able to categorize each trade into the certain setups that we use as traders. So some of my best trades are coils and blue skies. And I see this in the ledger because I log in my trades diligently. And it's because of this that I'm able to lessen my trades and focus just on the trades that I'm good at.
Right, what about you? Do you also label all your trades?
Yeah, that has to be the way. For example, last February, the market gave us all momentum trades. And if historically you are successful in those kinds of trades, you can do it. The past month, the market gave us, especially in the US, market gave us all range trades. So that's a different story. You have to have your hit ratio there, your edge ratio on those kinds of setups. And for what's happening now in the market, when markets are collapsing, you should be trading the capitulation setups. But for me, I might be enticed to buy it because prices are cheap. But if I look at my records, my statistic on capitulation setups are really that bad, meaning I suck at capitulation trades. I might forego the trade and just wait for better setups.
Okay, so you know where you're competent at.
Yes.
Okay. You know, I read this quote from a book before. It talks about 4 types of people. The first type of people is you know that you know that you don't know that you know, and the worst type of trader or the worst type of person is you don't know that you don't know. So the important part about journal and entries is that you got to make sure you know what type of label you're putting, right? Or else if you don't know what's right, what's wrong, whether it's the right setup or it's the wrong setup. So it's a challenge though. I mean, especially if you're starting, how do you know what's right, what's wrong? Right? So if that's the case, meaning if you're starting out and you're a beginner, do you let other people do it for you? Or is it just a self-conscious moment by yourself?
I agree that it's important to review your trades in the presence of a community. But I think that it's a process that runs parallel to reviewing your trades on your own. So I think you don't need to have a community to begin monitoring your trades. But I think that to keep yourself objective, it would be to your great benefit.
So it speeds up the learning curve.
It definitely speeds up the learning curve.
Yeah, that's true. Sometimes, even when we jot down all our trades, the results of all of our trades, when we look at it, sometimes we lie to ourselves and just ignore all the bad trades that we made and just focus on the good ones.
That's the sad part.
That's the sad part. People are enamored with the good ones. But actually, what drives your business are your tendencies.
Agree. And to take that to another level or to a higher level, once you know what you're good at and once you know what you're not good at, you can be very scientific about your trades moving forward. So the best traders, they don't really focus on just skill. There's always a logic behind everything that they do. And at the same time, there's always a certain expectation or a certain standard to every trade, which they follow.
How often do you guys review your trades?
So I make it a point to review my trades every day. But at the same time, I like to review my trades on multiple time frames. So I review my trades every day via the ledger. And then on a weekly basis, I make a review of my best and my worst trades. After every month, I try to see the bigger picture of how my trades have been going. And if maybe it's a shift in market sentiment or something bigger than just my actions that have caused these changes in my trades.
Okay, since you said that, you don't just focus on the results, I assume, but you more focus on what happened, the process, and then whether what was happening was good or bad based on the market conditions.
Yes.
And then try to find ways how to improve on that end.
Yes.
Okay. What about you, Brian? How often do you?
Same with Miggoy. I try to record all my trades the moment I make them. There's a style that I do in terms of analyzing my trades. I try to keep track of my average gains per trade and average loss per trade. If I see that the numbers are falling, both numbers are falling, that would tell me a lot about the market.
But it's so important to be patient during these times and wait for it, and then wait for your data analytics to show you you're doing much better in these types of environments, I assume.
Yeah, it's true. There's a saying that the best tool that the trader has that is most unutilized is patience. But actually, it has to be common sense already. But it's very difficult to do, to be patient from doing anything in the market, especially when you're a trader and watches the market prices jumping up and down. But having a ledger will help you be patient, actually. If you really know your numbers, what setups to look for, what setups will give you the kind of returns that you want, then why do stupid things?
Yeah, I totally agree.
Yeah.
I mean, a lot of people do a lot of unnecessary trades or trades that are not in their style.
Yes.
Right? So the nice thing about having a ledger is that you remove all the stuff that you don't want to be doing, and you want to keep on doing more of what you're doing right. And I think that's a challenge for a lot of people, is that when you're experiencing styles, right? Everybody has different styles, and everybody has different A setups. Everybody has their different preferentials, right? But at least the statistics don't lie.
I think the beauty of analyzing your trades, analyzing your performance over time and compiling all that data is that you're able to keep yourself consistent. And sure, we as traders search for oversized gains a lot of times. But I believe that in order to stay in this game in the long run, you have to be consistently making money or consistently keeping your losses short.
All right, so there you have it, guys. Listen to Brian. Be patient. Market's down 250 points. These don't come as a surprise to us, but at least you have to be mentally prepared to know what's going to come out forward. Until next week, have a great week. See you guys.